What is going on, you guys, and welcome back to another video. Dad, what is going on today?
Hey, all good up here in Paul River, Brandon. I must say, I'm looking forward to this video today, which might be the launch of a new series if it's received well by the audience. So looking forward to it, yeah.
Me too. And yeah, you guys can obviously let us know, but Mark and I had this idea where we could do basically a bullish versus bearish video on a variety of different stocks. And today we're going to be diving into CP Rail, which I think is a perfect one to kick things off with. Canadian stock, we see it in the comments all the time, and obviously some big exciting news with the merger, which again we'll get into today. But I guess the concept very briefly behind this new video series, Dad, is like, you know, when we talk about stocks on the channel, we only have 5 minutes or whatever to go over
On our stock battles.
Stock battles is being a great example. We tend to talk about, you know, the pros. Why do we like the stock? Why do we like the stock? Why do we like the stock? We're obviously not going to be doing too many negatives during the stock battles. But as you know, and as I'm sure our audience knows, when it comes to researching stocks, we have to consider the cons. We have to see the full picture, the bullish cases, the bearish arguments, and then come to a decision for yourself. And that's basically what we intend to do with this, is to go through a company, today CP, and then at the end, we'll give you our overall stance. And like the cool thing I think about this, Dad, is like you and I may agree, we may not agree, depending on the stock, obviously, and we can give our reasoning as to why. But yeah, that's kind of concept of the series.
Yeah, I think it'll be good and insightful because, like you say, it's really important to look at both. You don't want to just confirm your own bias, right? You want to look at everything.
No.
And we tend to go through that process generally when we're reviewing a portfolio or a stock to put into the portfolio. But this will sort of force that on us, if you will. And we'll try and keep it just as straight shooting as possible. And I like at the end of the day, it's not really a competition per se. It's more, okay, after looking at the pros and cons, what do you think? And on some companies, like you say, we're going to agree. Other companies, I think we're going to disagree. So I'm looking forward to sort of kicking things off and seeing how that goes. So great company to start with, CP Rail.
I'm excited to do the ones that we disagree on. I think this one, we do have some similar thoughts. But hey, I guess we'll see in a moment.
And on that note, if there's any stocks that our viewers think there might be a little bit of disagreement, I mean, throw them out and we'll just add them to the list of companies to cover as we go through this series.
For sure. So yeah, with that said, let's get into it. Let us know what you think down below, though. Yeah, good call out. Why don't we start with an overview? I'm sure a lot of us are familiar with CP Rail, but ticker here is CP.TO. It does trade on both exchanges, FYI, but obviously we'll be looking at the Canadian one today. Trading for $103.95 Canadian. They pay a small dividend of 0.73%. And I think what would be a fair way to kick this off, Dad, is maybe just looking at performance, like just a top-down level overview performance, just to fill in the viewers of how the stock has done. And looking back over the past year, CP has been the outperformer, really, amongst its peers. I say outperformer, it's been flat. What is that, 0.88%, I believe I'm seeing here, relative to CNR down 5%, and then a few of the other players down 20% range. But fascinatingly, over the past 5 years, a longer term time frame, CNR has been the winner, up 140.
CP.
Excuse me, I'm just good. Thank you. CP Rail, the winner. And it's funny. I noticed that sometimes in other industries where you kind of have the smaller player, the smaller player, it tends to kind of quietly outperform. You notice that too, or no?
Oh, absolutely. But that will be cyclical, I think. But I think of the Canadian banking system, and National Bank has kind of consistently outperformed, the big five, if you will. So that's another example of what we've been seeing here recently.
There's a lot of industries like that, and I guess when you're so big and you're kind of the dominant player, as you'll see, CP is a big player here too, obviously. Yeah. But when you are the dominant player, I guess it's just the law of big numbers, and you just kind of the growth is a little less opportunity, if you will, maybe.
Kind of makes it sound like CP is a baby in the field here, but we'll see as we go through what the company does and where they're at. They're actually a major player, obviously, in the North American railway system.
Absolutely. Well, hey, why don't you kick off with the fill the viewers in with the merger? What do we need to know about that?
Well, sure. Well, obviously, the big news this month, I guess. So in March here, we're doing this on March the 27th, 2023, and on March the 15th, the merger with Kansas City Southern and CP was officially approved, I guess you would say. So in April, very, very soon, they will be operating a CPKC. Now, I don't know if that's the new ticker or not. I'm not really sure about that, but it's kind of what they're going to be known by. After
I have a feeling it will be. I have a feeling it will be. I'm looking through.
I think as well.
Yeah, through all their investor relations page, that's what they're kind of branding as, going over
Yeah.
the past couple of weeks at least. So that would be my anticipation, but we'll see.
We'll know soon because April is right upon us
Hmm.
here. Totally now, if you look at their overall system, they're massive now. They got over 20,000 route miles of track. They are the only they're the only railroad in North America that directly connects Canada, the U.S., and Mexico. And you can see the breadth of the scope of their network now after the merger has come in place here. So the merger has, in my opinion, leans more towards the bullish side of things. There are some cons, which we'll cover
Hmm.
here. Let's look at
What?
some
Yeah. Why
bullish
we like
numbers.
the stock? Why we
Yeah,
like the
well,
stock?
well, first of all, if we just look at their most recent reporting, so we're looking at Q4 2022, so fourth quarter, but also the full year. Revenues 2.46 billion in the quarter, which is up 21% Q over Q. And if we look at the full year, the revenues are up 10%. So in a challenging market out there right now, very, very competitive that way. I want to look also at one of the metrics you'll see on this chart here, which is the operating ratio. And this is an efficiency ratio. And basically, when you look at this number, it's very applicable to the railroad industry. 80% operating efficiency or the operating ratio is considered to be good. 70-ish is considered to be really good. And look where CP is right now. They're operating at they're operating at 62.2% in this ratio. So when you look at that from an efficiency standpoint, and in a behemoth like this, like the industry really needs those numbers there. I think that really shines there. When you look at their revenue highlights from Q4, look at like I said, total revenue up 21%.
Yeah.
When you look at the breakdown there, so the foreign exchange adjusted revenue variance, but obviously the bulk of their revenues come from the grain side of things. And of all of the major areas, there only two have declined in the last few years. So you look at coal down 13%, you look at energy, chemicals, and plastic down 11%, but everything else has
You,
has moved in the right direction.
you know what you reminded me of? Like as you were going through the revenue numbers, you mentioned that, yeah, good numbers during a challenging time. And, during my CNR analysis, there was this one slide I came across just talking about how resilient the railroads are during economic, struggles.
Downturns.
And I wish I had that exact slide. Maybe I can fire it over to you afterwards. We can include it, but it's very telling. Like I was shocked to see that, the railroads are some of the most resilient companies out there. And we're seeing that with the revenue growth. Um,
Nice, yeah,
either on the quarter by quarter basis or full year for sure.
yeah,
I had a point here that I wanted to say out, and I say it all the time, but you hear the term moat thrown around all the time with all these companies, right? A company's moat, and do they have a strong moat, weak moat, whatever the case is. I find very very few companies have as unique of a moat as CP or CN,
yeah.
for this railway space. It is literally like impossible. Yeah, I should say impossible, but practically impossible to start a new railway system and all these competitors to pop up. Like we mentioned at the top, this is only one of two publicly traded railways in Canada. And
Yeah.
it is very, very unique to it after this merger has gone through. Like you said, connecting directly from Canada, US, Mexico, there's none that do that. And there was an article I came across saying that this was the first major railroad approval that was approved in 2 decades, right?
Yeah.
And I think that's it's a pro and a con. It's obviously a hassle if you're the company, trying to get through this process. Like this was over a 2 year process that they went through, but obviously once that does go through, it just provides that barrier. You don't see it happening all too often, right?
Well,
And
you compare it to sort of what's hot these days, online, and even it doesn't matter what you're doing online. It's pretty easy to become a competitor. Now, there's things like switching costs or what have you. We always have to be aware of, but you can start a new a Twitter competitor if you want to anytime,
I
right?
was I yeah, sorry to cut you. Go.
Well, so
Sorry.
you can't just go out and lay thousands of miles of track and start over from that perspective. So it's you said impossible, virtually impossible to start a competitor to this.
Literally, like virtually impossible. I was trying to think about. You mentioned there's the technology space, but like even in health, like pretty much every industry, it's yeah. I guess I'm not entirely sure how I want to say this, but it's yeah. I guess I can let you continue on. You kind of summarized it there well. There's
I,
very there yeah.
I can't disagree with you because
Yeah, there you go. I didn't say much, but exactly
yeah.
fair. Yeah. So yeah,
Well,
strong
let,
mode.
Very strong moat. Now, let me just carry on with sort of the bullish side of it. So things that might want you to lean towards buying this. I think of just transportation needs, or sorry, goods need to be transferred, and we're looking at essentially railroads or trucks, right? And there is a more of a trend, or there's a push to move because more towards the railroads. There's cost advantages if you're a shipper. There's also a big thing these days, of course, is the environmental benefits
Impact.
of trains. And the more trains that you have carrying goods and working in an efficient manner, the fewer trucks you have on the road. And so that is a big thing when it comes to what is the consumer going to be looking for. And obviously, if they can save money and be better for the environment, they're going to be looking to use rail versus trucks. So that's a good thing.
Do we have any updates, Dad, on EV rails coming soon?
No, I haven't heard it. Well, I know that they've been experimenting with it, but I don't see it coming. It'll come around probably when EV airplanes start flying around. So
Yeah, that's a bit of a joke. Yeah.
A bit of a joke. I like it. Good one. I also want to talk about sort of the intermodal aspect of the rail system. And so this is basically like back in the old days, if you shipped goods, so you bring goods from somewhere on a boat, they come into the port, they'd be offloaded onto a truck, often taken out of a ship container onto a truck container, moved over to a railway, and then reloaded there with all those touches and all the time that would take. Well, this intermodal system that they have been developing, and it's getting very efficient now, is in some cases, basically the train goes right to the ship, right? So when the ship container comes in, that same container goes over onto the railroad. And so imagine the time saving there.
Yeah.
Even a lot of the containers now are designed where they go from the ship to the truck to the train without offloading, unloading. So huge benefit.
Way less labor, yeah. Time saving, labor cost, exactly.
So this is, I don't know if that's necessarily bullish on CP, but it's certainly bullish on the industry in general, right? And one of the metrics, I don't know, don't have it in front of me here the exact number, but a positive increase in the RTM metric, which is revenue ton miles. So essentially what this is the revenue per ton of goods that are moved over a mile of track, right? So it's a way to measure. Well, I do see here they're up 17% in the most recent reporting. So obviously the more revenue they can get for that 1 mile of track, 1 ton, is awesome there. So do you want to chime in here, Brandon? I've got a couple of more notes here. I wouldn't mind covering off on this sort of topic. Okay, good.
You can feel free.
Now, before we move on, are you a Canadian watching this video that wants to learn the ins and outs of DIY investing? If so, I'd highly encourage you to check out the Investing Academy. The Investing Academy is our program where we've worked with thousands of Canadians across the country, in many cases starting from complete scratch, meaning I've never actually invested before. Maybe I've had mutual funds and I don't want to pay any more high fees. Maybe I am investing, but I'm just not entirely confident in my portfolio. We can walk you through step by step the entire way, teach you our process from the foundation, the fundamentals, the terminology, investment strategy, researching stocks, the whole 9 yards. We'll be there to guide and support you the entire way. And of course, you get to learn in a fun community-like environment where you can attend our webinars, you can watch our variety of programs, you can interact and mingle with all sorts of other Canadians who are looking to take control and get in charge of their investments. If that sounds like you and you are in the market for online training to fast track your learning journey, take a moment and click the link down below and schedule a call with our team. They'd be happy to speak with you. Now back to the video.
I'll bet some. Okay, well, I wanted to talk lastly sort of about the improvements to the fleet. You look at the types of things, and back in 2018, sort of a monumental time or instrumental time for CP, they ordered 5,900 new high capacity grain cars. So put more grain in a car as you're moving it across the prairies and across the country. The new hoppers allow 15,000 tons of wheat, which is up from around 10,400 in the previous versions. So you're looking at a 50% increase there in the capacity. Another big improvement that CP specifically has made here is I don't really know how to explain it in layman's terms, but there's when you look at the longer trains today, they can have up to 8,500 feet of trains is kind of what they're currently working at now. In 2017, they had 12 grain elevators that had the capacity to fill those trains. So when the train pulled in, they had these 12. Well, the network today has 47 of those, and they have expectations to be up to about 55 in 2024. So coming up next year. Nuts and bolts of that is that they can pull in with a massive train, load it up, and move it along, as opposed to more trains doing smaller trips. So obviously, from an efficiency perspective, again, we come back to that. CP is one of the leaders in the industry there.
So basically, this is obviously an old industry, but they're constantly making improvements and constantly
Great point.
improving the flow of how it works. Yeah.
Absolutely,
Wow.
yeah.
Those are some fascinating numbers. And I guess that kind of moves into my point pretty well, because I was looking more so at the metrics, their financial metrics. How have they been? And I believe they're quite strong across the board. EPS, earnings per share growth, is projected just as for next year at 24%. And hey, maybe a cause of all of these many things that you talked about, all these improvements they're making over the next 5 years. This is expected to slow down, kind of settle in that 11% range, but hey, moving in the right direction. Revenue next year expected to grow at 31%. And I think, I guess due to I bring this more back to the moat and the fact that they are just such a unique company. Hey, when we look at not all metrics, but I see healthy margins across the board. It's what you'd want to see out of a good company like this. 81 is what you're looking at on the screen. This is actually a bit high. I looked into the exact math. It sits somewhere in 50 to 55% range for their gross margins. Operating margins at 37, 38%. Again, very, very good there. And in terms of their actual income and cash, both very steady. They pulled in $4 billion in cash from operating activities in year 2022. 3.5 billion in net income in the same calendar year, which is growing at about 10% compounded. So yeah, I guess what we're seeing in the financial metrics data is a reflection of all of these things that you mentioned. Hopefully that was a good way of kind of summarizing what you were saying, all these little adjustments and adaptations that they're making. It is moving the stock into the right direction. So I think for many reasons, there's a lot to like about CP. And I think that kind of caps off our bullish segment.
It is, and I'd love to go on and on, but obviously we are limited for time, and we can't have a 2-hour podcast or a 2-hour YouTube channel.
Yeah.
Here, so video. So good. Well, let's move then to the bearish aspect of things, because, like I say, it's important that we do that. So first of all, the first thing that jumps out to me when I'm looking at why you might not want to buy CP at this point is inflation. Right, expenses across the board are rising. They are obviously trying to bring that board back into check right now, but it's a struggle out there. And we look at what's the biggest cost to a railroad. Well, it is the fuel costs, and if we can see by their operating expenses here in Q4, a 73% increase in fuel costs versus their 2021. So just massive increases there. That hopefully will be sort of more of a transitory thing, to use a bad word. Hopefully we'll keep that under check. But that's something that, if you are bearish, you might that probably is a very good reason why you're saying we might want to buy that right now. Another thing that jumps out to me is just the tough labor market. So kind of more of a macroeconomic thing that we're in right now with labor being tight. We've seen so many industries, and the airline industry being a prime example of struggle to get employees, and especially the key employees. You need pilots to fly the airplane, right? And they've struggled there. Now, on this note, CP, I think, is a little bit of an outlier here in the rail space. They've actually just concluded a record year of hiring. Which is fascinating, where they've gone on a bit of a spending spree. And if we look at a report here, their CEO, Keith Creel, says recently, in spite of a historically tight labor market in 22, it was a record year of hiring at CP. We added more than 1,600 conductors over the course of last year. And so that is, I say that's an outlier.
Bullish? Is that bullish?
Well, it's kind of bullish. So in a bearish argument for the competitive tight labor market out there, I don't know, this kind of offsets
Fair.
that, if you will. And maybe finally on the topic of another negative positive in the labor market is, of course, a company like this has a lot of union employees, and that can often lead to disruptions and to problems. But when we look at a couple of big unions that CP deals with, we look at Unifor first. Just back in February, so about a month ago, they signed a new deal, a new 2-year deal to ratify with their employees. And then if we move to BLET, or the Brotherhood of Locomotive Engineers and Trainmen, in March, on March 7th, they announced that they've ratified a deal with them there. So it's definitely an area that could bring on some bearishness, but I think CP is doing a pretty good job of countering those. So every investor can leave their evaluation of that up to themselves, I guess.
Yeah. My, I was just looking at that Brotherhood of Locomotive Engineers and Trainmen. I was looking
Yes.
at that name. Just had a couple interesting thoughts there. But yeah,
Probably why is it still called that today?
yeah.
I
Well,
know.
it's just how much longer? There's like two. I'm just looking at that. There's two kind of male things that jump out there. It's just fresh on my mind because I obviously did the women's collab last week. But
Well,
the
yeah, good point. I mean, yeah, you can't look at that name without going, maybe it's time to update that name. But we're just reporting the news, okay? Here, so
we don't set the names. We don't pick the names. But that just jumped out to
yeah,
me. Anyways, yeah,
yeah,
great points there. The points that I definitely were looking at were specifically on the dividend. Like I mentioned at the top, only
yeah.
0.73% dividend. That's decently low, right? And if
To,
you could,
I was going to
what's
say,
up?
to me, always as I've looked at either CN or CR here,
Yeah.
CP, I've always looked at that low dividend, and it's one of the things where you might not want to buy it if you're more of an income-oriented investor.
Keyword there. If you, well, key sentence, if you are a dividend income investor, and yeah, like CNR, like you said, to me that's like low but passable, right? Okay, 1.8, 2% dividend, that's still I think passable. 0.7 is quite low. In fact, if you like look at that against the industry average, industry average is 1.8, and this comes in significantly below that. I guess it's only fair to compare up to CNR here. I guess the idea behind this series is not that I'm comparing this to CNR or to their competitors. We're hoping to take more or less you know, a specific look at CP. But like, I think in this case, it makes sense to compare to CNR. I think Canadians, when they're looking between the, Canadian railroads, they're basically comparing the two. And in many cases, I
I
think
think you
that's a
have to.
fair,
You have to,
I
yeah.
think you have to. You're looking at your investment options, and I think could be argued as a bearish case that hey, CNR pays the 2% dividend, and here you're only getting 0.7%. So again,
That's
maybe less important. Yeah,
astronomically low. The good news is it's safe with a
there.
20% payout ratio, right? So
That's for sure. I'd consider both of these dividends very very safe. In
yeah,
terms of maybe just some price and value metrics, again, comparing to CNR, I would give CNR the vote in this case. Based on Morningstar's analysis, they see CP trading at a 10% premium. However much weight you want to put on that, that's up to you. But nevertheless, a two-star buy with a 10% premium today. If we look at their forward PEs and compare, we see 23 times for CP versus CNR's 20 times. So again, if you are making that apples to apples comparison, what is the more quote unquote attractive buy, at least based on the dividend metric or based on their price to earnings ratio? I would give CNR the lean there. That's just my personal take on it.
definitely bearish in my perspective. And we
And
talked
let me
about
be clear. So let me
yeah,
be clear. Like and that's where I want to make sure I'm clear to the audience what I'm trying to say. I'm not trying to say it's a bad dividend. I'm just saying when comparing against CNR, it is more towards the bearish side, if that makes sense. You know what
I
I'm
would even
saying?
go a little bit further, and I would say it is a pretty bad dividend. That's in my opinion, but I get it. In the industry, very capital intensive, you got to have a lot of money set aside. But I certainly wouldn't be buying it for the dividend. That is definitely on the bearish side. Last on the bearish side, I think we need to address debt, because if you've been following the debt of CP, I mean, it's basically spiked up. You look at this chart here, you can see the dramatic increase over the last year. Now, obviously, a lot of that, or maybe not obvious, but a lot of that is a result of the Kansas City acquisition, right? They took on a lot of debt to fund that. So the question would be, do they bring this down? Now, they've said they're going to aggressively try and pay this down. I have
Yeah.
faith in that, but it definitely is a knock against acquiring the company right now when you look at that, right?
Yeah, I believe I was just looking at their Q4 earnings. I believe they put about I believe it was about 1.7 billion that went towards debt repayment. So that's already,
Yes.
a chunk of their cash is already being redirected to this, and it's going to be a priority for the next coming years. No doubt that has to be dealt with time for sure.
Yeah, the question will basically be, what's the payoff? As it always is, they borrowed the money to make this acquisition. Now they have to come up with recouping that, and then of course going into the economies of scale and upping that, right?
Yeah, and I guess in summary, to kind of move on to I guess the fun part about this series is what is our vote? Bullish, bearish, what's our take? I wonder if we have to just pick bullish or bearish, or it could be slightly bullish, slightly bearish. If I had to go out, I'll just go out on a limb and start things off. I would say that overall, I am bullish on CP as a whole. And you mentioned there, yeah, they took on some debt, but what is you weigh that with the future of what this deal means to them, and for many of the reasons we covered today, being the only connect between Canada, U.S., Mexico, the metrics that we looked at, to me, this is something that I think is more so in favor to CP than not. Again, I would say a caveat to my bullish pick here is that is it more bullish for me than CNR? Like, would I rather have CP than CNR? I'm not going as far as saying that. I do own CNR, and that's been my favorite of the railroads personally. But overall, if I had to say bullish or bearish, my vote goes bullish with CP today.
Well, in our first bullish versus bearish video, I guess we have a consensus of sorts, Brandon, because in overall,
Yeah.
I'm saying I would be bullish on CP as well for all the reasons we went over in the first part of the video here. With the caveat, I mean, I'm not expecting any great numbers to come out of it. They have to transition. They have to work this significant merger in, but once that's the case, they should grow. They should see the benefits of that. So, for that reason, mainly, I'm saying, yeah, I'm bullish on the company as a whole, which is not proviso that it doesn't mean that they're going to skyrocket in the next 6 months or anything along those lines. I suspect it'll be a really good long-term hold. That's kind of, I guess, what a long-winded way of saying that. So we have an agreement.
For sure. I think so. And yeah, I think that's a great way to kind of summarize the first episode here in
Yeah.
bullish versus bearish. Yeah. We believe
Yeah.
CP is a great long term hold. But hey, these are just our thoughts and these are just our research. You guys need to go take the time and do your own. And yeah, spend the time doing your own due diligence and finding other sources to listen to. Just because we think they're a bullish pick doesn't mean you just go buy it. That's for
And
sure.
maybe tell us where we're wrong. That's one of the things I love about our community is people are always willing to say, did you think about this, or here's other things. And clearly we can't cover everything in a video like this, but do you think CP is bullish or bearish? Love to hear what the community thinks. Say some details on those choices.
For sure. And yeah, as well, maybe while you're down in the comment section, if you have a suggestion for kind of the next episode of this, we're very, very interested in hearing. And we kind of have a list of ones we would do, but we can, if we get a lot of votes and thumbs up on certain ones that are more interesting to you guys, we can definitely bump those up the list, and maybe very well the next one that we do cover in bullish versus bearish.
That's even hard to say. Bullish versus bearish. It sounds
Bullish
good.
versus bearish and CP and CNR. Yeah, a lot of mix-ups today, but hey,
Yeah.
thanks for spending the time, Dad. And yeah, it was a blast. Make sure you guys, if you made it this far, give a thumbs up on the video. Subscribe, obviously, if you're not subscribed, and of course, Investing Academy down below if you guys are in the market for course and training. But yeah, any final send-off thoughts?
Sunning it off, Brandon.
With that, we can wrap it up. Thanks,
Sounds
guys, for
good.
watching. Yeah, hope you enjoyed, and we'll see you in the next video.